Thank you so much, Micah, for joining us today. We're super excited to have FISYN on an internal webinar with us. Looking forward to incorporating this in several resources that we have for our clients to further educate them on, Texas land development as well. So fantastic. Um, we are interested to learn a little bit more about the FISYN Fund II. So can you give us a brief overview of FISYN Fund II and the investment strategy?
Yeah, definitely. First of all, thanks for having me, Nicole. It's awesome. We love Madison Trust and working with y'all. We obviously do a lot of business and we love working with y'all. So that first and foremost. But yeah, so FISYN Fund II, we are a income and equity land fund located out of Fort Worth, Texas. What we do is we buy and we sell raw land, raw commercial land here in the state of Texas. We get those properties entitled and rezoned to add value to the properties, as well as holding on 18 to 24 month time period before we turn around and sell these properties to developers. So with that being said, FISYN Fund II started January 17th of this year. We have an 18-month offering period. We're about 50% capacity on it. So I believe we should be fully funded by about March to maybe May of next year. Cutoff time is August. And then we have a 5-year hold period. So our expiration for Fund II is going to be it's February of 2030. And then we're also a laddered Reg A, Reg D fund. So we take both accredited as well as non-accredited investors into our offering. Something to note about that, unlike a lot of real estate funds out there, with a Reg A portion on your offering, you go through a vetting process with the SEC. So they go through 5 years of audited financials, 5 years of transaction history, as well as they go through fund viability. So how well do they think that this fund is going to perform? So we got that, approved and fully registered on the SEC.gov website. So you can look us up there. But yeah, that's a quick overview of FISYN, what we do. Yeah.
Perfect. Now that we have an overall sense of the fund strategy, let's really talk about the underlying asset, which is raw land in Texas. So this is often an area our self-directed IRA investors are interested in exploring, especially with diversification. So what factors may make raw land in Texas an appealing asset class?
Yeah. So raw commercial land in Texas specifically. It's not volatile. You're not going to have the stock market sort of volatility or crypto volatility. You're not going to have any regular market, secondary market volatility that you see everywhere else, as you do in Texas real estate. So with raw land purchases, number one, we're not buying any properties with fixtures on them. So we don't have any buildings or anything like that on them. And with that, we're not going to realize any sort of depreciation on the properties as well. So, if you have a building, it's going to, you have termites, you have fires, things like that. With raw land, it is what it is. Now, going back to what I was saying before, Texas, even in economic, downturns, generally speaking, when you have a piece of raw commercial land that you have entitled or whatever it is, it's not going to go down in value. So it's a very safe investment that is a tangible asset that your money is secured to, which is, what FISYN does. So I know I'm kind of going off on a tangent here, but a lot of funds out there, they will, secure debt with these property purchases. We don't do that. So we're a zero debt leverage instrument fund when we purchase these properties. Can we make more money with debt? Yes, we can. However, we don't want to do that because that puts our investor capital at risk. So we're all cash purchases. When investors place money with us, their money's secured directly through a tangible asset with zero depreciation on it, which is the Texas commercial real estate itself. So the properties that we're purchasing. And then, yeah, I'd say that's pretty much it. Yeah, I think that fully covers the question.
Awesome. So now we understand why Texas land is so appealing. Can you explain to us how the entitlement and rezoning process may contribute to land value over time?
Yeah, so entitling land in general is going to add value to it.
Mm,
Strategic rezoning is going to add value to a property. Moving it from agricultural to commercial use is going to add value to a property. That's going to be across the board, everywhere in the United States. Texas specifically, we are in a very unique, if you follow the, central Texas, the hill country part of Texas where I grew up, Austin, it's grown tremendously. So over the past 15 years, we have seen a big boom from people that are moving out here. And so on top of these land entitlements that we're putting onto the properties, we're buying in the path of growth. So we want to be about 2 years ahead of time, where we anticipate an area is going to expand and grow in population. We utilize a proprietary software system that we're currently developing and putting into the actual work for funds too. But that helps us target where these properties are going to be. So
sure.
Texas is it's a great state in general. And like I said before, entitling a piece of property is going to add value to it. Rezoning a piece of property is going to add value to it across the board. Texas specifically, there's just so much growth that's coming here. Over
Hmm.
the, I saw an article like 3 months ago. It was if Texas was its own country, we'd have the eighth largest GDP in the
Hmm.
world, and that's competing with
Right.
China. That's competing with Russia. And
Wow.
that's just us specifically as a state. So we're a business friendly state. We're affordable to live in. People love us.
Hmm.
We have the Southern hospitality out here. Our
Yeah.
drivers are terrible, but
The food's good.
the food's
Austin food
great.
is delicious.
Yeah, but other than that, I love that I grew up here. I grew up in Austin, and I love that I
Mhm.
live out in Fort Worth now. But yeah, that's what it is to answer your question plainly.
Yeah, perfect. Well, since many of our audience members are, of course, self-directed IRA investors, understanding cash flow is very critical to them. How can investors receive monthly distributions, and how may those distributions generally be treated for tax purposes?
Great question. So we get investors from all over the board. We'll have investors from, a college kid that got $1,000 from his grandmother that he, places with us, from our Reg A portion. That's our bare minimum. And then we have, I would say most of our investors come from, retirees, looking for that consistent monthly income. But to go into our offering itself, for our Class A shares, we have a $25,000 minimum on the investment. What you're going to be receiving is a 12% annualized income paid out to you monthly, quarterly, annually, or you have the option of compounding this income as well. And then you also receive at the end of the fund a 20% equity participation. So it's great for retirees to place money into, especially if they're done, they have their IRA, their 401k, whatever
Mhm.
it may be that they're going to be placing funds with us, because they're going to be receiving that monthly income throughout this entire process. So that's something that they can bank on and know that they're going to be getting a nice payout at the end of the fund as well in the form of equity from the properties that we sell. So while they're getting their monthly income that we're paying to them out of
Mhm.
our pocket, they are also receiving that equity on the back end. So that's something for them to look forward to. In
Perfect.
terms of tax purposes, so with our investments, long-term capital gains tax. So that's all that you're going to be realizing. So when you invest with us, you're placing money into funds too. You're the way it works is it's actually categorized as a return of capital. So you're receiving a K1 at the end of each year. On that K1, you have your cost basis that is specified on that K1, which is, a reduction of your cost basis every single year. So say you invested $100,000 and you invested for 5 years. At the end of year 5, you're going to have a cost basis of $40,000. However, we make you whole on the back end. So you're not going to be paying any sort of taxes on this income throughout the life of the fund. And it's going to be categorized as a return of capital. And then we make you whole at the end of the fund. So we give you your full principal of $100,000 back. You have made $60,000 in income, return of capital, because that's what we're paying you back in the principal. And then on top of that, you're also receiving your 20% equity. So you have $60,000 in your pocket, tax free. You have your principal investment of $100,000, and then you have that 20% equity payout, whatever that is. Generally, it's going to be 18 to 20% per year on average. So for this instance, let's just say it's another 100% return. You get an extra $100,000 coming back to you. It's a nice little payout. You've been receiving income this whole time.
Right.
Now, you are not taxed at a regular ordinary income taxes. So all of the return of capital and the equity that you receive is taxed at a long-term capital gains tax, which is about 15 to 20% of it's going to be 15 to 20% depending on, how much you make per year. So, and then, so I think that pretty much covers it. As far as IRAs go, obviously we work with y'all pretty frequently.
Yes.
We take all sorts of investments, with the exception of 401ks, unless you are going to be consolidating I'm sorry, except for 1031 exchanges. I apologize.
I was going to say,
401ks,
we have 401ks all the time.
Yeah,
we'll take them.
We accept 401ks. Yeah, sorry. All the numbers are getting jumbled in my head. We accept the 401ks. We accept IRAs. We accept all forms of investments with the exception of 1031 exchanges, simply for the reason of the SEC not allowing it into private placements. However, there are, ways around that. If you want to hop on a call with me, I'd be happy to go over that as well with you. But yeah, so that pretty much covers it.
Yeah, absolutely. And thank you so much for going into the fund structure. I know you mentioned the SEC, and I do have to say our disclaimer here, although Madison Trust, we are a self-directed IRA custodian. We are also a passive custodian. So we encourage all of our clients who are listening right now to, of course, do their due diligence on the entities they choose to hold within their self-directed IRAs. It's up to the clients to self-direct those retirement funds into assets of their choosing. So it's important to work with a CPA or a tax professional on what best fits your structure. So just to go over, the FISYN fund and the portfolio scale, can you provide a number of properties managed and total assets under management with FISYN?
Yeah. So Fund II, we're going to have 4 assets under management. We're currently in the process of underwriting 2 properties here in the DFW area that we should be putting into the fund here shortly if we can get the pricing correct on them. It takes about 3 months to underwrite properties at a time. So we picked those 2 properties. Hopefully we can get those in the fund here fairly soon. But it's so 4 assets under management with 20 equating to 23 million under management as well. So wow. Obviously we're still in the capital raise period. We've started buying properties. We're going to hit that full 50 million for the raise. And then, we're aiming to 3x the total fund value at the end of year 5 at the very longest. My anticipation is that we should be fully closed out by mid 2028 to late 2029, that kind of time period. But if we continue on into that 2030 range, we're that's the end goal is 30 properties in the fund, with a total valuation when we close it out at around 125 million, 150 million would be ideal.
Yeah, fantastic. Well, many investors are familiar with more traditional strategies like multifamily or syndication. How do you feel this strategy compares with more traditional real estate approaches such as multifamily or syndications in terms of structure or objectives?
Yeah. So our strategy is for the investors. So our money is invested alongside our investors. We're on the same side of the table as they are, and we are seed funding these funds when we open them up. So we have skin in the game as well as our investors. Now, what sets us apart from a lot of other funds or syndications or trusts out there,
Mhm.
or just private investments, but specifically funds. What sets us apart is that we are all cash buyers on these properties. So we don't want the banks involved. We want to buy these properties all cash because that is the security behind the investment. Okay, so investors that invest money with us, they're gonna be able to sleep at night knowing that their money is going to have value no matter what. You're not investing into stock. So it's not based off of, obviously you want FISYN to do well, but it's not the fluctuation of the value of our company. It's the fluctuation of the
Right.
value of the properties and the fund. So when you invest with us, you're purchasing units in the fund. Those units equate to your percentage of ownership that you hold in the fund. And
Mhm.
that's going to be spread across all of the properties from purchase to sale. So you invest. It's a very hands-free approach for the investors. We keep them very updated with quarterly newsletters. Sorry about
Yep.
that. And we also update them with monthly investor statements that get emailed to them directly. So how much have you made this month? How much have you made to date from the start of your investment? And so on and so forth. So we're currently updating our investor portal. We just
Great.
implemented a new investment portal for our Reg D investors. We are going to be moving our Reg A investors shortly to an updated platform. So it's a little bit more hands-on. So that's going to be another something that they're going to be able to interact with to get updates on what's happening, with their hard-earned dollars that they invested with us and that they entrusted with us. So, yeah.
Sure. Well, I'm looking forward to seeing that. And Josh and Jonah, shout out to you guys. I work with you guys every week, if not every month, and I'm excited to see that roll out. Keeping the investors in mind, what really should they be mindful of in terms of this type of strategy? Like, how does FISYN approach managing different factors?
So, I'm sorry. Do you repeat that one more time?
What key considerations should investors keep in mind with this type of strategy, and how does FISYN approach managing those factors?
Okay. So I guess maybe what are the risks involved
Right,
with these
exactly.
types of investments? Yeah.
Hmm.
So obviously we're a real estate fund. Our performance is going to be predicated off the market. However, we do take these into consideration. Um, especially the markets in Texas. We take all of it into consideration. Is it a buyer's market? Is it a seller's market? Which areas are growing in a, buyer's market, and which areas are growing in a seller's market? So
Hmm.
obviously, during the buyer's markets, we want to be purchasing land that we can hold in the fund. And take 2024 for instance. That would be worst case scenario. So we have high interest rates, and we also have inflation at an all-time high as well. And developers, they're not purchasing properties because they're not able to make profitable margins
Mhm.
on the developments that they're going to do. So they're holding on and maybe, doing a C of O on a, project and letting it run. Say it's a self-storage or something like that. They're going to go
Mhm.
ahead and occupy it, get it managed, and let it run. And then they're going to go ahead and turn this property around and sell it once that market, condition eases up a little bit. So 2024 was a great example that I tell a lot of investors, and it's the worst case scenario that you're going to run into with FISYN. It's we have properties that we know their value and we're not getting the offers, we're not getting the pricing that we want to get on these properties. So we're going to wait for those interest rates to drop, which they have. And we have currently gotten a lot better offers on a few properties that we've been holding in Fund One, which is still in operation. So we
Mhm.
should be closing that out here Q1 or Q2 of next year. But yeah, so that would be the risk that would be involved with this is your money being locked into land.
Mhm.
Um, but we take that into consideration and we're paying this income out over time. So we've been in operation as a business for 10 years officially now. My
Mhm.
father's the one who I'm actually in his office right now. Everybody always talks about these guns, but he started our company and he started our company at a little over 10 years. I think we're coming up on year 11 soon. But we've never missed an income payment in that time. So we continue to strive and protect our investors as well as want to make sure that we're performing. And during
Right.
that whole time period, we've also had zero losses on any property that we've ever done. So it's something that we hang our hats on and that we want to uphold and make sure that we continue on that tradition for our investors from
Sure.
now and until the very very long term future. So
Yeah.
yeah.
Absolutely. Well, that's a lot to be proud of. Finally, for investors considering alternative investments, it's important to know whether their goals align with this strategy. So, what types of investor goals or profiles may be a good fit for FISYN?
Yeah, so like what I was saying before, the best, I mean, I'm gonna tell you IRAs, use Madison Trust. IRAs are what we mostly get through the fund.
Mhm.
However, the perfect investor profile is gonna be, like I said before, our investors are gonna range from an 18-year-old kid out of college to a 90-year-old retiree,
Right.
and they just want something that they can lock in for their family's future. And we have beneficiary documents for them as well if anything were to happen. But yeah, to go back to that ideal investor, it's going to range. However, we do get a lot of IRAs that come through. You can invest with your IRA. And we also do have a lot, I would say probably 40% of our investors come from annuities.
Mm.
So as you probably already
Yes.
know, and you've seen our advertising.
Hmm.
Annuities they're low yielding investments, and that's the long and the short of them. It
Right.
depends on what kind of agent you get, and if they're going to put you in a an indexed annuity that's going to fit your needs and be able to perform for you. However, there's a lot of investors out there that don't have this. So they
Right.
get put into an annuity with a 10-year contract and, they're stuck there and they think they're stuck there. And we know that because, my father actually used to work in that industry as well. But we know that that feeling that they're in. We talk to people every single day about it. So we pay out these surrender fees for our investors and so we pay out the surrender fees to make them whole on the investment. And then when they place their funds with us, that's obviously going to, be made up in the form of the returns that FISYN FISYN, offers for our investors. But yeah, so
Yeah.
that's pretty much it. To give you
Well, perfect.
a full synopsis, I'd probably say 60% of our investors come from IRAs or 401ks, and then 40% are either annuities and private investments.
Yeah, well, fantastic. Thank you so much for, sharing all of this insight. It's definitely appreciated for our investors who are interested in learning different strategies to diversify retirement funds with as well.
Yeah, I just want to thank Nicole again and Madison Trust for having us on. It's like I said, always a pleasure to be working with y'all, and you guys make our lives so much easier. So thank you, Nicole, for what you do.